The lion has rolled, things are green, the market is green, and everything is looking green at the green bank, that is KCB. And I'll be having a quick side chat with the group CEO, Paul Russo, to just unpack the numbers and see how are they doing now, what's the feeling and what's the outlook now that they have done this stellar performance on their half-year results. Let's get into the conversation. Paul, it's good to see you and welcome.
Thank you very much.
First of all, let's give you your flowers. Congratulations.
Thank you.
It's a stellar performance. The last time we had, you were scratching your head a little bit on the dividend side of things, but this time round, you have come back and you promised and you said, let's wait and see by the next half, and things have happened. First of all, what is your feeling on this half-year results? You let me pick that from your end.
Really, truly proud of the performance of the team. Mm-hmm. But I'm not surprised. Yeah. And for anyone that looked at our numbers in 2023, even when the number that people look at, whether it's profit before tax or profit after tax, was significantly lower year on year, the fundamentals were up. Yeah. We were getting significant hit, largely on provisions of legacy items. Yeah. And I said as a CEO that I was going to take that opportunity to clean up. And we did exactly that. Yeah. The fundamentals were there. Yeah. But on the back of that, we have been building a team across the region to enable us to deliver our 2024-2026 strategy. Yeah. This current team built that strategy. Wow. So deeply committed to deliver what they've built. Yeah. And that strategy is about transforming today together. Yeah. And like I say, the simplest way to explain it is a sense of urgency in doing things and doing it together. Absolutely. So I'm truly proud of the team. I'm genuinely not surprised. And that's why we could commit. Okay. 86% increase in profit after tax, 29.9 billion. Powerful start, especially for you and this time round. One would question this, as usual, the sustainability. They say when you're at the top, one of the toughest is to remain at that top. What's your plan on this? It is. When we announced Q1, there was a doubt. There was a doubt, right? Yeah. Now we are into half of the year, and then there is still a doubt. It's our own race, and we run our own race. Yes. We run that race for the shareholders, for the investors, for our own colleagues, and for our partners. Yeah. The environment is unpredictable. Yeah. It's tough. Okay. But it is at the end of the day. And I'm a strong proponent of this. Yeah. The quality of the people behind the brand that count. It is about the experience for our customers. Yeah. And because we have the right people, the 12,144 staff, delivering the best they can for the customers, I'm positive of the outlook. Wow. Let me finalize on the good news as well. Dividends, you had promised that we wait and see, and you have delivered something. What's the word for shareholders now? I would say thank you. Yes. I've had investor roadshows. Yes. I've received support. Yeah. On the decision that we made. Investors understood it was the right decision to make at that point. Excellent. They understood the fundamentals of the organization. Yes. We've reflected a true performance. And I thank the board for making the decision to give the highest interim dividend for the first time. Yeah. And it's also the right messaging. If you stick with an institution of strong governance like KCB, then we must reward with that performance. And that truly is what is expected. Yeah. And it's been received positively. I think the investors probably, even if they were waiting, I think they were thinking of 1 shilling. Yes. 1 shilling 50 cents. That's quite something, absolutely. Yeah. And congratulations on that, and also to the shareholders. So let's talk about
your subsidiary contributions, excluding Kenya, when I looked at your books, 37%, actually 37.8% to be precise, on pre-tax profits on all your subsidiaries. And I wanted to provide just an insights on the specific markets or subsidiaries, driving the growth and the strategies moving forward.
So I think if you look at 2023, and I always say, if it wasn't for our subsidiaries, it would have been a disaster for the group performance.
You're right.
I don't joke when I say we would have issued a profit warning.
Yeah.
So one is we see that institutions from Kenya that expanded to the region have been able to de-risk in a way.
Yeah.
But also there's a story behind that performance. We started up the cleanup and the reset of our subsidiaries way back in 2018.
Yeah.
Remember, around about those periods, the contribution from subsidiaries was 5%.
Yeah.
The group board set an ambition from a push from shareholders.
Yeah.
An ambition of 15%.
Yeah.
So we then had to say, what did we need to do different?
Yes.
It wasn't just about starting to deliver strategies that are local rather than Kenya-centric strategies in those markets. But it was also about starting to get local talent and local capabilities.
Absolutely.
When I joined KCB in 2014, I think all managing directors and subsidiaries were Kenyans.
They're all Kenyans.
All Kenyans, right? The chairman of subsidiaries were Kenyans.
Yes.
So we had to start with governance.
Yeah.
Get people who know those markets.
You're right.
To run those markets and invest in those resources.
And even know the ecosystem.
And know the ecosystem. I am a realist, so some things I say, people get shocked, but it's just the truth. So if you are a chairman who is from Kenya, you fly in once in a quarter for a board meeting and you get out. How are you helping the business?
Yeah.
Right?
Absolutely. Absolutely.
So we made certain fundamental changes. Now, when you look at a business like Tanzania, for the period that I joined, it was loss-making. But look at the numbers today. Investing in our people, deep relationship with customers.
Yeah.
And allowing the business to run from a local informed position.
Yeah.
We obviously made an acquisition in Rwanda.
Yeah.
And that gave us footprint. That also gave us an appeal for us to push a local brand. That's why we withdrew KCB Rwanda brand and put in BPR brand.
Yeah. Yeah.
Uganda has always been a pain for many.
You're right.
And you can see other banks and subsidiaries. You can see the pain they're going through in those markets. Yet it is our number one trading partner. But you can see for us, the decisions we took in 2019 are paying off now. So I'll just say, it takes time to turn, and that's exactly where KCB Kenya is at.
Yeah.
We're taking those decisions that we took in 2019 on the subs is what we took in 2023. So you're starting to see KCB Kenya making the right level of contribution after a cleanup and a painful decision. You've got to take that shot.
Absolutely, absolutely. And so far it's paid off, definitely, from the numbers. Let's talk about a little bit on your acquisition and strategy around it. The last time we talked about, you had just started off your conversations with Access Credit Bank, absolutely, yes. Access Bank to acquire the 100% NBK, which was your baby. You said it was a painful moment. And then when I looked at the books now, it looks like NBK is out of the deck now and you're giving it away. In fact, I wanted to ask you later on, would you reconsider, but how is it going so far now?
No, and you had me recognizing that team yesterday.
Yes.
To deliver that result on the back of a very difficult 2023.
Yeah.
And also, with an ongoing transaction, just keeping that focus isn't for all human beings is a tough one.
Yeah.
But I think the decision we made about NBK is the right call, and we believe it's the right call.
Okay.
I still, emphasize that it's actually a fantastic institution.
Yeah.
But you have to make decisions for the good of the group.
Yeah.
Most of the time we try to make decisions from our hearts. I think I don't.
Yeah.
In the end, So it's the only entity that is not compliant on capital.
Yeah.
It would mean if you want to retain it, you have to pump in not less than 8 billion shillings.
Yeah.
To make it compliant. But most importantly, the friction and overlap between KCB Kenya and NBK hinders the growth of both.
Absolutely.
Yeah. So those are the two fundamental reasons why we have to make this call.
Okay.
It's a quality institution.
Yeah.
But you have an overlap of services and clients, as well as you have to put in capital to let it grow and be able to service customers.
Okay.
It has some very loyal customers. They need to service those customers.
Right.
Yeah.
You're right.
So it's a hard call when you're announcing good results, and but it's the right decision. And allow me to say this: it is also the opportunity to defend 1,200 jobs.
Wow. It is.
Right?
Yeah.
Because somebody can also say, Paul, why didn't you integrate it with KCB Kenya?
Why not?
Right?
Yeah.
So you have to think about more than just addition of numbers into the TT.
Yeah.
Right?
Yeah. You're right.
So the board went through a detailed review process to make that call. I can tell you in that boardroom, it wasn't the easiest of decisions to sell.
Yeah.
Yeah.
Wow. Anyway, I think you've left it at a very good footprint right now, looking at the numbers and all that. You're still facing your headwinds. When you look at the macro operating environments right now, there has been quite a number of it, especially in terms of the Kenya macroeconomic environment. We're talking about fiscal consolidation measures that we have been seeing around, credit ratings downgrade. In fact, I wanted to focus my question on that. When you see Kenya downgraded to those levels, how does it come to affect your bottom line especially, and what do you see its impact on your operations?
You know, and that's the risk of being big. And
that's true.
Because you at the end you take the sovereign risk, right? Top of mind is just appetite of investors into the country.
Yeah.
That will be dampened, right? And if that happens, it has an effect on the economy.
Yeah.
But it also has an effect on government, which is the biggest spender, and you want government to spend.
You're right.
Right?
Yeah.
For the economy to thrive.
Yeah.
I think sometimes people, say government is spending a lot. Government stops spending, you will feel it, right?
Yeah, that's true.
But cost of credit will go up because the risk premium.
Yes.
Right?
Yeah.
Just that downgrading raises the risk premium.
Absolutely.
So the cost of borrowing, whether it is by government or just even ourselves and banks, in terms of whether you're borrowing from to show up your tier 2 capital, or just to fund, for example, certain lines like SMEs, it goes up, and you have to pass that premium to somebody else.
Yeah.
Now the downside is the purchasing power and what is available for individuals is shrinking.
Yeah.
Therefore, that appetite for borrowing, as well as the risk of repayment goes up.
Yeah.
So that outlook is tight. And if you notice, and I've just looked at some numbers again from even competition, loan growth has not been as big as it used to be. When you can see averages of 5%, 6%, 7%, 9%, right? Even for us, it's probably the lowest. If you look at our promise and what we've delivered, it's one of the scores that is red, because we evaluate ourselves against the promise we've made.
Absolutely.
Because that appetite, you're going to now start thinking risk management and risk containment. But then what happens to the SMEs?
Yeah.
What happens to the business? Because private credit will shrink.
Absolutely.
Right? Because everybody is, heightening risk management.
Yeah.
But more, I think at the end of the day, and it's a collective, that even as we have the pain, the debts owed by government will still have to be repaid.
Yeah.
because only then will we be able to improve our rating, right?
Yes.
So that debt burden plays a big role in that rating.
Yeah.
Because what are they looking at in simple language, right?
Yeah. Yeah.
They are looking at your ability to repay.
Yeah. Absolutely.
And once they have less confidence,
Yes.
they downgrade you.
You're right.
Right? But I also stress that we need to be a lot better in communicating.
Mm-hmm.
Right? And you can sense how broad that question is and how it touches almost everybody.
Yes.
And it requires all of us to come together to try and address that. And doesn't help that we are in the grey list.
Yeah.
So a combination of downgrade and grey list.
It's very bad for us. You're right.
And you can see the liquidity constraints in the market just because of that.
Yeah.
So I tend to go that basic because it is actually when we go to that level that we communicate, it requires every single person to come through for that rating to improve.
Yeah. Maybe as we come to a close of this, two things that I wanted you to address. First, yesterday when I listened to you, you've had your hits and misses working with government, loaning government and all that, and you were quite bold when you spoke about it. I don't know, what are your learnings and what are you moving forward in the next season? What are you looking at it so that at least you're still operating in a safe environment for yourselves and your customers?
No, we've had lots of success with government.
Okay.
We compete with every bank who wants to do business with government, right?
Yes.
Don't get me wrong.
Yeah.
One day, as I say, if people write books or I write an article, G2G will be one of those success stories, despite all the noise.
You're right.
Yeah?
Yeah.
And allow me, I'm a natural just, I say it as it is. You cross to Burundi and see the queues to buy fuel.
Oh, no.
Today, I was in Burundi on Friday.
Yeah.
People leave cars in the petrol stations.
Just here.
Really? So we had to find a solution to be able to, oil marketers had Kenyan shillings, there are no dollars in the market, they wouldn't be able to buy. So we collectively came together to try and find that solution.
Yeah.
I'm glad today, I think when you interviewed me 6 months ago, we were the only bank. Today there are like 10 banks in G2G.
That's true.
Right?
Yeah.
A great success story. Sorting out a national issue, it makes business sense on this other front.
Yeah.
You know, there's a record of, significant improved food production because of fertilizer. Government has reduced the, price of fertilizer. We are right behind that.
Yeah.
It's been a success story, not a single loss for KCB.
Yeah.
Even as people write and talk about the KNTC, they did the fertilizer the first, they did rice, they did beans to try and to bring prices down.
Yeah.
They went fantastic work.
Fantastic.
Right?
Yeah.
So the stain is this edible oil issue. And I think at the end of the day, it's how you strengthen institutions to be able to run certain transactions.
You're right.
Right?
Yeah.
We have one of the best trade finance teams in this side of town. I can put George Kiluva in front of everybody and they would confirm that he is a master in trade finance. But you need the partners to have the institutions in the right shape.
Absolutely.
To be able to do that.
Yeah.
And that's the state. Now, we've always said we will run any engagement with government on a case-by-case basis.
Yeah.
Right? But also take lessons and say from any of those. It wasn't told as a story, right? As I come to a close.
Yeah.
We've had probably 3 names in government that were bad for like 10 years.
10 years.
We've resolved that in the last 6-8 months.
Wow. Yeah.
Right?
Great.
It makes sense to work and collaborate at the end of the day. But it's also good to point out that there's that stain and talk about it.
You're right.
Because if
not just hide about it, that's true.
Don't run away from it. Did we do it? Yes.
Yeah.
I mean, there's been investigations about it by all, agencies, right?
Absolutely.
That will take its own path.
Yeah.
But my own staff read things in the papers.
Yeah.
They deserve an answer.
Yeah. They see
Isn't
it.
In the call yesterday, all our staff were in the call.
Yeah.
They deserve to know that.
They deserve to. That's true.
If you try and skirt around it, you injure the credibility of the leadership. Right? If you then be bold and say as it is, you move along with your team. The most important element for me is the customers,
Yeah.
my staff, and the investors.
Yeah.
Those three must know the truth and must be aligned. If you try and skirt around it, it's not for me.
You're right. So my final question, I can't end without really, because I noticed just 2 days ago or 3 days ago, you launched your sustainability report. I'd like you to just say a thing or two about it. And of course, the concern that I've heard some shareholders tell me to ask you, is Ethiopia coming in soon? I mean, we could end with that.
Is what coming?
Ethiopia.
Oh, okay.
Yes.
Yeah, we can come to that. At the end of the day, we can be successful organizations. Those of us that make profits and significant profits.
Yeah.
Those of us that are of scale in the markets that we operate in must play a role beyond making money.
Yeah. True that.
We must take care of people, we must take care of communities, and we must take care of the planet.
You're right.
I think we complicate sustainability, ESG. It is simply saying you must play a role beyond making money.
Absolutely.
And you must leave this place better than you found it.
Yeah.
KCB must be at the core, must be at the table, if not in the front to lead that.
There must be.
Whether we're using a KCB foundation, whether it's in the way we lend and greening that lending, whether it's in the projects that we fund to be able to do that, or also in advocacy for the right things to do. Right? You had CS Duale talk about Nairobi River.
Yeah.
Right?
Yeah.
And I said, at the end of the day, you've got to play a role and say, how do I contribute? It's not just cleaning Kencom using cheaper lights, it is here. How? We've been asking our own teams, why should we be using diesel-generated power in branches in northern Kenya? So we're taking all our branches in northern Kenya onto solar. Yeah. Right? So we take the front, and I'm proud of the work the team has done. I think on expansion, Ethiopia remains the missing piece. We've been following, and I've been very clear to shareholders. It's one of those that we want to enter. Yeah. But I think I'm betting on, from all the info, September is the month we are working on. Okay. But I've been watching and waiting for the last 2 years. But I assure you that KCB management and board has done the homework. Okay. All right. But there are more interesting kind of convo, and these will be more probably things that, as we think about what is KCB of the future, we have to think about digital. Okay. And how we wire ourselves, and that will be probably another area that I'll be looking at. Speaking about that, you have doubled your digital transactions, and you said you're giving out $1 billion a day. That's how far it's going. But I also noticed your ATMs as well. Transactions are still on the rise as well, I think at 141%. How are you marrying these two? So the ATM story is us going to our corporate customers and SME customers and say, look, you don't need to rush to the branch. We're investing in CDM machines. They run 24/7. And let me take a step back. So look at the branch like Moi Avenue. Around about 5, just before they close, it fills up because the traders are bringing in money to the bank before you close. So we go to Tomboya and the other side, and we put a CDM. You don't have to rush to come. We've gone to our big corporates. I said, look, here is a CDM. we will collect the money for you.
Yes.
Right? That's the ATM. I think for digital, if you recall, a year or so ago, I said we upped our headcount on IT to 450. I think people thought I was joking. We are actually investing in capabilities to be able to take KCB to the digital level. So it's starting to pay.
Wow. Congratulations on that.
Asante sana.
I have to end by asking you to tell shareholders, what's your promise? You know, the other time you promised, yes, wait and see. Probably there's another promise so we can keep you accountable on it.
All what I will say, and I will repeat what I said yesterday, is outlook is strong.
Yeah.
You know, there are so many moving parts in markets like Kenya, but we are positive that risks have been identified and they're being mitigated. And stick with us. Stick with us.
There you have it. Paul Russo himself, Group Chief Executive, KCB, and the lion has rolled. Very positive and still saying that, listen, we are upbeat, the outlook is good. And they have promised that wait and see, we have not just started, but we are moving on. Thank you so much for your time. I'll leave you now with the markets.